Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the outlook for the rally with stocks at highs, tariffs still looming, and earnings about to kick off. We will ask the committee what trades make the most sense right now. Joining me for the hour today, Joe Terranova, Steve Weiss, Jim Lebenthal. We will check the markets here. We do have some red across the board today. We're saying that the second half officially starts today. It's the end of the holiday weekend. The tax bill's done. The tariffs are still looming. Earnings about to start, and stocks are at record highs. That's how the table is set. So, Joe, how does the table look?
Okay, so the table in the near term still looks good. Momentum names still holding serve. Axon, Palantir, higher today. Mag 7, I know we're going to talk a lot about Tesla, but how about Amazon, which to me looks like it's breaking out. It looks like it's going to go above 2.25. Meta remains strong. That's the moment. That's where we are right now. However, my expectation for the third quarter is, at best, we're flat to lower. And I think one of the reasons why is going to be about July 15th. What is July 15th? The start of the earnings season. July 15th, we're going to hear about earnings. We've been lowering the estimates for earnings. I think we are going to learn that corporations have absorbed the tariff cost, and that is going to see significant margin compression. The inflation from tariffs, it's not showing up in the inflation report, so it's going to show up somewhere. And I think it's going to show up in margin compression. It'll be okay if you get the revenue growth, but consumer discretionary, consumer staple, I think you're going to see earnings growth year on year that's going to be down. I think the biggest challenge we have in front of us is going to be earnings.
You know what else is July 15th? This is to buttress your point, is June CPI. And we have not seen the tariffs show up in the inflation numbers yet. I mean, if it's going to show up, it's got to show up then. I'm just accenting your point, Joe.
Okay. The commentary this morning, Pasquarello at Goldman, is still a bull market, yet one that is delivering less convexity and less consistency than before. Core positions that I believe in and would marry as a composite: U.S. technology and U.S. power, steeper global yield curves, a somewhat weaker dollar, and don't fight the primary trend in gold. Morgan Stanley's Mike Wilson. Weiss, a tougher first half, what we just went through. Yep. Better second half, and better 26. Could be some consolidation, he says, during Q3. They're bullish on a 6 to 12-month horizon. He thinks that earnings tailwinds are going to expand, not contract.
Yeah, I'm going to disagree with him. So I agree with Joe that up until, and Jim makes a great point on CPI, because I don't think you have to see it in July 15th, and I know that's what you meant, but I think it's likely you start to see it, and not only from a cost input affecting margins with companies, but also from a demand input. So you've seen a lot of pre-tariff buying by consumer, by corporations, pre-supply chain stocking, and that's going to run out at some point. If you go to buy a car, they say, despite tariffs being announced on cars and in place already, they say you can get pre-tariff prices now. So they're trying to drive demand. That's going to run out eventually. The reason why I disagree in the second half is because I do think inflation takes a foothold. I do think that we're going to run out of time on delays, and that all the good news on tariffs, like with the tax bill, whatever he calls the bill, being pulled through into the market, which is the reason for the sell-off today. I would hardly call this a sell-off how we've gone. But I think that all the good news from the Trump administration has already been seen and discounted in the market. And now
all of it?
I believe so. I'm saying in terms of stocks, for example.
Well, I know what you're saying. I mean, what else would you be saying in terms of whatever else?
In terms of, for example, the deduction of capital expenditures up to, I think they raised it to $4 million, that if it's put into use in the year you buy it, that will show up in some of the companies in there when they report. Not this quarter, but going forward.
Well, Weiss, how can stronger economic growth that they think is going to happen as a result of the bill and deregulation and tariffs not being as bad as once feared, how can that all be in the market already?
Because the market's trading at record highs. It's trading above what we viewed as a troubled valuation area a year ago before this, and the fundamentals don't support. We are starting to see a slowing in the economy. If you work through all the basically what they're saying is, oh, this is going to drive tremendous growth. You can't get away from the fact that prices are higher, that they still don't have tariff deals. And while they don't have tariff deals, at some point, he's going to have to not extend the tariffs, but actually deploy the tariffs, which will affect pricing and demand.
They're making a big bet on classic supply side economics.
That's exactly right.
You flood the zone with the opportunity to spend more, make more, reinvest more, and thus earnings grow more, the economy grows more, and that what looks relatively expensive today to some in terms of the multiple of the market, like Weiss, actually isn't, because you are at the beginning of this more prolonged growth period than not. That's the argument.
You just used the term supply side, and I've got to say, in the last several months, that's the first time I've heard somebody say it, and that's exactly what it is. This is supply side economics. Now, we can debunk it based on history, but here's what I think is going to happen. First off, in the short term, Joe's right. We got the Treasury about to refill its coffers with the debt ceiling lifted. You've got seasonality coming in August and September. I wouldn't be surprised if the third quarter is lousy, but
and that's healthy.
Fine. But I think we're going to end up the year higher by meaningful amounts than we are now because of what, Scott, you just mentioned, which is that this is a pro-growth budget bill. Now, Steve, you're right. We got some serious questions about what, no, hang on. We got some serious questions about what the tariff deals are going to be. And if this extends this question, this uncertainty past August 1st, we're going to have problems because companies have hesitated on hiring. They've hesitated on CapEx. Even giving the extra CapEx expenditure, that is a huge benefit, but if we don't have the deals in place by August 1st, they're just not going to know what to do. I think they will. I'm just going to finish really quickly, Steve.
Go ahead.
I think they will get these deals in place. They know they need them, and after that, this CapEx expenditure is very pro-growth. Next year, earnings are estimated to grow 14% year over year. I think they will.
Okay. Let me clarify my position. I'm still fully invested. I haven't taken anything off whatsoever. I still think that's the path of least resistance. All I'm saying is that I think we will have a softer earnings period. To Joe's point, earnings estimates typically get cut 3% going into every period.
I mean, they've already come down. Now the bar's lower.
Right. The bar's lower.
Now you don't have to jump so high.
But that's for this quarter. Guidance for next quarter, I think, is going to be somewhat muted because you can't guide. You don't know what tariffs are going to be. You can't take the word of the administration. How many times have we heard that? I've got 20 deals this week that are going to sign. So until you see the whites of their eyes, so to speak, you're not going to take that out of the market. So my point is that we're going to see, because of higher prices, and we'll talk about the airlines later. We could see it in other goods as well, and services. Keep in mind, you're taking a lot of the population, the immigrant population, out of the workforce. You know, the deportation numbers aren't as large as we saw under Obama or Biden so far, but they will exceed it. But they're scared, they're hiding. So that's going to be wage inflation. So there are all these knock-on effects. Yes, the bill is pro-business, without a doubt. It's pro-growth. And the continuing threats on Powell, if he does fire him, doesn't have the right to, I think that could lead to something positive. But the point is, I think that everything right now is being seen through rose-colored glasses, and I don't believe that's the right stance.
Well, I mean, the people wearing the rose-colored glasses are saying, I've heard the coulda, woulda, shoulda for months.
The rose-colored
and it hasn't happened.
At some point it does.
The glasses now for CEOs have gotten a little more clear than they were before. They were these big, thick ones before. They couldn't really see through the lenses very well. And now they feel like they've got a little more clarity. Heck,
I don't think any CEO feels they have clarity.
I think they feel like they got a lot more today than they did 3 months ago.
We're talking different CEOs.
They could barely give. Well, you're talking to, you're not talking to the biggest CEOs in America.
I'm talking to some pretty big CEOs.
We're not going to get in a match about the type of CEOs we're talking about. But I know for a fact that guidance last quarter was way better than people thought.
Way better.
Most people expected no guidance whatsoever. Mm-hmm. Now, some gave two things of guidance just to cover themselves, but I feel like there's a lot more clarity today than there was 3 months ago. How can there not be? You can argue that?
I can. Where are tariffs?
Well, I mean,
you're a CEO. You're going to make $1 billion investment unless you're a semiconductor CEO and bringing it into the U.S. And that's going to be a long tail, right, to get those up and running. Do you have greater clarity in terms of what the tariffs will be, where your supply chain should be?
Oh, I feel like you have certainly much better clarity than you did.
Well, you know you
don't
want to be in China, but we saw some back. You
know what the rules of the road are with Vietnam, right? That covers a large swath of American business there. You figure something positive is going to come out of China because it has to for both parties, so the worst is off the table there.
Nobody's betting on China. Everybody's pulling their
the worst has already been negotiated away.
The actions from this presidential administration show that they do not want the reciprocal tariffs that were put in place on April 2nd to go through. If they did want those levels, if that was their end goal, they would not have kicked the can down the road today and pushed it off to August 1st.
I'm the first one at the desk who said,
I'm not attacking you.
I know you're not. They'll delay the tariffs for another 90 days, and they'll keep delaying. So the market's OD'd on tariff news.
But
the only place the tariff can hurt the market is if they start putting some of these deals to effect. All I'm saying, I'm just highlighting risks. I'm not highlighting probabilities.
I totally get it, and there's an argument to be made that people are too complacent to the risks relative to where the price of the market is. I totally get that.
That's my whole point.
I would only submit, for the record, that a lot of the risks that were put on the table before had not come to fruition, so maybe they don't this time. We'll have to see. I think one of the big questions as we make the turn, as I said, we hit the halfway house over the weekend. Now we're on the back nine of the year. What happens to that trade that had us doing pretty well? Lower quality, higher beta, you can call it, in some respects, momentum. Some had said, well, maybe the rally's on thinner ice because it's being held up by a lower quality cohort of stocks. You've had 9 consecutive days of gains from the high beta ETF. That's the longest streak since January of 2018. Wall Street Journal with a piece about meme stocks and YOLO bets are back and fueling the market's rally. We kind of get that, right? Krinsky says there's some signs of froth. What do we think?
I think that the vessel that is carrying the rose-colored glasses thesis is momentum. And that's giving comfort to those that are allocating towards lower quality and high beta. The minute you see a reversal in that vessel, the minute that momentum begins to correct, they're going to lose that comfort, and you're going to see a precipitous correction. I expect that to happen in this quarter. I actually think that's healthy for the overall bull market that we're in.
And not unusual, by the way.
Hey,
not
Stiefel
unusual.
Says we're going to correct 12% to about 5,500. Okay, that's what they say in the second half.
Barring a geopolitical shock, I don't think we're going down 12%, but who knows? We could. But we will recover from that. I think the setup into the fourth quarter is a very strong one because, again, I believe, and I think I differ with Steve on this, I don't think there's this permanency to elevated costs related to tariffs. The fact that companies are eating that cost is laying the framework for a bridge for the administration to come up with deals. The nature, the quality of the deals, we'll question that later on. I don't think the deals are going to be so great, but who knows? But that will allow for the opportunity where the inflation, to your point, the inflation never appears. The inflation never appears. And if the inflation doesn't appear on September 18th or September 17th, rather, you're going to get that rate cut. The market's going to cheer that. It's going to applaud that. And when you move into the fourth quarter, that's going to allow for margin expansion because at that point, corporations will not have that drag of eating the tariff cost.
Okay, now the other question, what does retail do? Because you could easily make an argument that the market held up as well as it did and was as resilient as it was through periods of turbulence and uncertainty, which appeared to be endless over the prior 6 months. Retail didn't sell, not in any big wave. Now you have the political party from Musk, and you have this feud again picking up with President Trump. Highly entertaining to some, no doubt. Highly concerning to some Tesla shareholders. That has to be clear at this point. Speaking of, Bryn Talkington joins us now. She is a Tesla shareholder, longtime supporter of the stock and of Elon Musk. And just when you thought you were out, they pull you back in. So what are you thinking now, Bryn?
No, it's like I'm actually surprised that people are surprised about this because whether it's buying Twitter, going all in on President Trump's election, going scorched earth on President Trump, there's a great adage, Scott, that when people show you who they are, believe them. And Elon's going to continue to do what he wants to do. Now, as it relates to this new party, the American Party, from what I understand, he's going to be supporting, various, representatives, congressmen, et cetera, that have his views around fiscal conservatism, et cetera. So at this point, I don't think he's going to be spending that much money, being that we just passed this massive bill. So I think today is a little bit of an overreaction, but I do think there's fatigue setting in, though. But I think when you have someone that runs 6 companies, very successful, has a great team underneath it, I just think I think today is a little bit of an overreaction, but I do agree it does get a bit frustrating.
William Blair tries to put some numbers around the whole thing, obviously looking at the passage of the bill and what it's going to mean, because of the EV credit, which is, in many respects, the match that lit this whole thing. While the $7,500 tax credit is likely to affect demand, the combination of a demand headwind and over $2 billion in profits from regulatory credits at risk may be too much for investors to bear. What about that investor, you, Bryn? These are real numbers behind what is ailing the stock activity today, at least in part.
Well, I think on the tax credit, obviously the tax credit of I think it was $2.4 billion last year that they get from like the carbon credits. But in terms of the consumer credit of $7,500, what I'm thinking of, and I haven't done the math yet, but I think it may net out because these cars are made in America. Interest for earners at $100,000 and then join at $200,000. If you make a car in America, you're going to get to deduct that interest. So I do think that's going to be somewhat of an offset. And I think with high rates, for people that want to own a Tesla, you're losing the $7,500, but you're going to get that deductibility of interest. So we'll see how that fleshes out. But as I've said many times, Scott, the current fundamentals of the current business are deteriorating. And so I think you want to own this name, and I really try to look at it pragmatically. You want to own this name and sell calls against it. So, towards the end of the close, I'm going to be adding to the position, but I'm going to sell the September 320 calls, which is only about 8 weeks out, 9 weeks out, and I'm going to collect $20. So if it gets called away, I make 16%. If it doesn't, I've earned 7%, or I've reduced my cost basis on this new position by $20. And so I still think this 250, 260 to 350 is where we're going to trade. And so I think if I'm going to enter in a new position, I definitely want to sell calls on it right now since we're not down at that 250, 260 yet.
All right. Interesting to get your perspective and certainly hear about this new trade. Bryn, thank you. Bryn Talkington joining us on Tesla. Speaking of, and maybe it's no coincidence here, Joe, Uber hit a fresh all-time high today. The target goes to 120 from 100. Reiterated overweight at Wells. Let's take a look at that stock. There it is. Oh, we were just looking at it. Let's throw it back.
Keep that chart up.
We don't need to see that. Let's look at the chart.
That's a good-looking chart. That is a
chart.
good-looking chart, and that chart is going to continue to move higher. This is a company that I think will have a market cap that can double, maybe triple over the next 5 years, clearly. They've done such a remarkable job in just cleaning up the balance sheet, making them a profitable company, and the diversification of the business model has been one of the reasons why. 52-week high, all-time high today for sure. The stock, in my opinion, and its ability to reward the shareholders is also going to attract more of an investor class that previously was going to invest in names like Tesla. There's less volatility. There's less agita, as we say, than being involved in Tesla. So
who's we?
I think maybe.
You? Okay.
Yeah, for sure.
All right.
I think this is a stock that is undervalued. I think it's a stock that's going to move significantly higher.
Okay.
I have a question on that, if I could.
Yeah.
Please.
We saw
Proceed.
Thank you. We saw Uber trade down, not significantly, but trade down as the market was trading up in advance of the robo-taxi announcement.
Don't you still? You own Uber, don't you? Oh, you don't own Uber?
I don't own Uber. I have a very small position. It's not even worth talking about. It's like I'm out of it completely. I sold most of it, like 90% of it. But my question for you is this. Then we saw the stock have this huge move up, one after the robo-taxi. Now, do you think that could be caused by one of two things? It could be caused by that Uber shareholders now and those that sold it don't really fear the robo-taxi, right? Because Uber's got a much more profitable model on that, or it could be that the Tesla announcement talked about a much larger market people have expanded on, and then they had it anticipated. I think it's the former, not the latter, because the economics of having the drivers and everybody else, but Uber are much better. What do you think?
I agree with you on that. I also think what the street sees is that they're not worried about the technology of Tesla because there's a response there with the relationship they have with Waymo.
Exactly.
I think that people really don't understand how far the technological advantage is for Waymo. Waymo,
Thank you, Joe.
Without a doubt.
Waymo
Thank
has
you.
been phenomenal in what they have done in autonomous driving. And now, for Uber to have that affiliation with them, why do I need to worry about what Tesla's going to
it's
do?
his business.
Let me just finish.
Hold on, hurry up.
So
I
let
wanna
me
get
just
the-
follow this through to Tesla.
Get the Admiral
So
in
we've
here.
taken the robo-taxi.
Guys like chomping at the
we
bit
sort
here.
of muted the robo-taxi story. It's there, but Uber's better. Then humanoids, extremely crowded space already. We're there far behind as well. Auto sales are going way down. We've moved the incentive with, in terms of the tax incentive. I don't understand why people want to own such an overvalued stock with a brand that's already been destroyed,
Tesla.
at least
You're
in the
talking
U.S.
about
and
Tesla.
global.
You're talking about Tesla.
I'm talking about Tesla.
Okay.
There's no
Lasso
business.
these guys. You said you know how to do that.
There's no.
You said you worked as
I
a
know, but they're
you said
running
you
in
worked as
different
a ranch
directions.
hand. They're wild horses over
They're
here.
wild dogies is what they are. That's what you call them, dogies.
Go ahead.
Google is, look, if we're in the backstretch of this horse race of who's going to win self-driving and driverless taxis and everything, Google is the one that's kind of in the middle of the pack, but I think is going to do a secretariat on the way home. All right? This is a stock that's trading at 18 times. That is putting a lot of discount into what we've all talked about of Perplexity and everything else eating into their core business. Waymo is going fabulously, and that discount that I just mentioned on competition is way too much. Google is the one that in the second half of this year is likely to pick up the pace.
Let me hit up a couple stocks before we get out of here for the first break. High flyers that are getting a little bit of pullback today. Netflix downgraded its Seaport. It's to neutral. Weiss, what's your take on a stock that is certainly one of the best charts in this market year to date? Let's look at that, please.
Yeah, look, they still think the long term looks good. There's some uncertainty about how well they're going to bring in the ad tier, et cetera. I'm not in a position where I want to sell it because of what may be a bumpy short term. This is still a long-term compounder, and why take the tax hit if I believe over time it's still going to accrete in value?
CrowdStrike, Joe, downgraded today to neutral at Piper Sandler. You personally own that. Let's take a look at that stock on a year-to-date basis. There it is. Nice-looking name there, too.
Okay, so you could include Netflix in the same conversation.
That's what we just did.
Surrounding CrowdStrike.
What's
interesting?
He should be a producer.
What's interesting about it? I'm going to stay right in this chair.
You just did that.
I like this chair
really
much better. My
talent.
tan works.
The talent to identify segues and things that work together.
Do you want me behind the camera or in front of the camera?
Well, I mean,
I think I'm better.
We
in front
literally
of the
just mentioned Netflix, then we moved to CrowdStrike, and you say it could be mentioned in the same conversation with Netflix.
Because there really
are. Were you sleeping in the prior
the
part of the conversation?
No, not at all. The characteristics of each of these companies are very similar, and they're defined by the word that you love most, which is momentum. Now, if you look at these stocks, it's very clear that you could say from a technical basis that they could pull back to their 50-day moving average very easily. They're both sitting relatively comfortably above each of them. But the problem with that is if you're taking profit here, which I have no problem with, then you're asking yourself the question, when the market resets in the fourth quarter, how am I getting back in once again? Because these companies continue to deliver. In the case of Netflix, the second half of the year, you're buying the content. The content is going to be phenomenal on Netflix. In the case of CrowdStrike, nothing is changing about the overall global environment and the need to spend on cybersecurity. Pull up a chart of Fortinet today. You could see the very same pattern. I'll add one stock into this conversation, Spotify.
Do it.
That is pulling back as well. That is something that you want to buy in a correction. Each one of these three stocks, any corrective behavior in the third quarter, you want to buy it.
I got to stop you. Let's throw up the S&P 500, please. And we're going to go to Megan Cassell at the White House because we do have some news regarding tariffs. Megan, you ready to go on this?
Yes, I'm reading this as we get it, Scott. The president has just posted on Truth Social 2 letters that he says he has sent to the Prime Minister of Japan and the President of South Korea, informing them both that they will be now charged 25% tariffs beginning on August 1st on all exports that they are sending into the United States. That, of course, will be a tariff that is ultimately paid by the importers in the U.S. who are buying those goods from Japan and South Korea, but all of their exports now to the U.S. will be hit with a 25% tariff beginning on August 1st. He says this will be separate from any sectoral tariffs that might already be in place or might be coming into place. And this, of course, Scott, is what he threatened to do when he said he would be sending letters beginning at noon today to these world leaders. He also says in the letter that if either country decides to retaliate by any amount, he will add that onto the 25% tariff. So it will only increase to match whatever they retaliate with. So we will have to see how these countries respond. The August 1st enactment date does give a little bit more room to negotiate. And one final thing I'll flag, Scott, is that for South Korea, this is the same reciprocal rate. They were initially going to be charged at 25%. For Japan, initially it was 24%. Now it's around 25%. So it's basically kicking back in those reciprocal rates that we first heard about back on April 2nd. Scott?
Okay. All right, Megan, thank you for the very latest. You let us know if you have anything else on that. We'll put you right back on. It's Megan Casella on the North Lawn. Maybe that speaks, Weiss, to what you're talking about.
I mean, I'm used to being right, just not proven right so quickly.
It took about 27 minutes or so. We'll see if you're wrong in the next 3 or 4 or 5. It's likely to happen, too. When the minute you start bragging, you know, things start turning on you. But seriously,
yeah, this is the fear.
Those are not insignificant numbers by any stretch. I mean, you're thinking of, you know, cars and chips and things like that.
Look, I don't think those stay, but I think the point is the market will get spooked as countries don't come in and agree to a tariff framework. I mean, Japan already said, look, we're not going to see anything until the end of the summer, so that's not new news. He's just anxious to get some wins on the board, and he's going to have this kind of message to do it, and that will spook the market.
Yeah, but you just said the money line of what you just said is, quote, I don't think those are going to stay.
No, I don't.
Okay, so why do you get all negative? Why are you going to get negative then?
Stay for a long period of time. I think that they could stay for a month or 2 or a quarter to show he means business, because he's at that point where he has to mean business.
They're economically unsustainable for either party. So they have to, at some point, be relaxed back. The same thing happened May 9th in Geneva with the Chinese.
Yep.
Jimmy, you have a
These
thought?
letters are a cattle prod. That's all it is, and the market sees through it. Of course, it goes down on this news. I think it's going to adjust on the way back up pretty quickly. This is looked at as a negotiating tactic.
This is Yellowstone Jimmy today.
It is Yellowstone Jimmy today, and I'm enjoying it.
Yeah.
Going back to my youth at a ranch camp.
All right, so let's take a quick break. QT, overweight. The initiation comes from Barclays. The price target, $65. They say that this company has, quote, desirable combination of downside resilience and upside torque. What do you think? You own it?
Yeah, I do own it. The stock has been pulling back recently. Let me give you a stock just in case we're wrong on this. The stop should be $48. I think the challenge here looking forward for EQT is that they are unhedged in 2026. They've been hedged in 2025. Obviously, that has worked to their advantage. Natural gas prices continue to push lower. That's going to put some downside pressure on the company. It does not eliminate the premise that this is a quality company and a great way to get exposure to natural gas. It's been that way for the last 3 to 4 years. But let's risk manage the position rather, and understand the potential looking forward is that natural gas prices don't recover. That will affect the stock.
All right. Farmer Jim, the self-described one-time ranch hand, says he can use a lasso. I'd call you-know-what on that a little bit, but we'll see.
It's been a few decades. But rather than lasso, why don't you pick yourselves up some shares of BlackRock there, partner? We'll go higher with the markets overall.
All right. I like that.
Oh, shucks.
There he goes.
Weiss.
Hey,
Weiss.
Bitcoin, look, it's a risk asset. Mark goes down, but I think this is next area for Trump's focus.
Okay, Joe T.
The horse to ride home is Costco.
All right. It's one too many, but that's okay.
Yeah.
See you on the bell.
Hello, everybody. Welcome to Blue Cloud Trading. This is the channel where we'll take a look at the stocks that they just talked about on the show and ETFs. We can see the list right here from CNBC, Uber, Blackstone, Bitcoin, CrowdStrike, Spotify, EQT, Costco, Japan, South Korea. We'll also take a look at the Mag 7 stocks, some of the stocks that I don't have in my portfolio currently. We'll take a look at the member requests as well as the indices. And just an important thing I want to mention real quick is the fact that this channel, for the first time, has reached 20,000 subscribers, a new milestone. Thank you all who have subscribed. I really appreciate all of you. Let's get to the next level, folks. 10,000 more. Okay, let's bring it up to 30K. It's going to take a little while maybe, but with your help, there's a lot of people on this channel. I believe it's like 30% of the viewers of this channel that return to the channel have subscribed. If the other 70% did subscribed as well, we could hit that easily, all right? Let's do an experiment. Let's see how far we can get. That 20,000. Let's see if we can get up to at least 25,000 or maybe 30. That would be so fantastic. Anyway, so let's get started here. First thing I want to do is talk about what happened in the markets today. It was a down day, not good. Okay, Dow Jones was down 0.94%. Nasdaq closed down 0.92. S&P 500 down 0.79, and the Russell 2000 down 1.5%. We look at the heat map. A lot of red, as you can see right there. Palantir was up 3.54%, though. Uber was up, but Tesla down 6.79%. You may have heard about what occurred with. Let me just look at let's take a quick look at the news here. Where is it? Where's that article that I read? I think it was under. Oh, yeah, I remember now. It was at the top of this page here. There it is. Okay, so, gosh, I hate those advertisements. It just got rid of that. Hold on. There we go. Tesla loses. Are you ready? $68 billion in value after Elon Musk says he is launching a political party to go up against both the Republican and the Democrat Party. And so that's going to be an interesting thing to see how all of that transpires. Now, what are some of the other interesting news that happened today? Trump announced steep tariffs on 5 more countries starting on August 1st. Interestingly enough, one of the countries happens to be, are you ready? Elon Musk's. This is where he was born, South Africa, got hit. Then it was Japan, 25%, South Korea, 25%. I'm not sure what the percentages are for Malaysia, Kazakhstan, South Africa, Laos, or Myanmar. But he's also threatening that if these countries, Japan and South Korea, increase, okay, let's say that they want to, they also increase the tariffs on the United States by 25%. Well, then Donald Trump will increase it another 25%. So more chaos in the markets for sure. We'll be watching as all that transpires. Dow closed down 420 points as Trump unveils the new tariffs. EU avoids U.S. tariff letter. Eyes concessions, EU sources say. Interesting. That just came out 40 minutes ago. Let's see let's take a quick look and see what that's all about. Basically, Brussels. Okay, the European Union will not receive a letter from the U.S. stating setting out higher tariffs. EU sources familiar with the matter told Reuters on Monday and is eyeing possible exemptions from the U.S. baseline levy of 10%. U.S. President Donald Trump began informing in a wave of letters a range of trading partners from Japan to Myanmar of sharply higher tariffs on goods they sell into the United States. The idea, the concept of the letters reminds me of, if you look at the history of, the experience that in business that Donald Trump has, it's mainly been in real estate. So I'm sure he's sent out quite a few letters over the years, most likely evicting people, possibly. I'm just saying, I wouldn't be shocked by that, especially in some of the older buildings that he used to have. I know that he did a little of that back in the day. But anyway, let's get back to what we're talking about here. Now, groups, what were the sectors that did well today? Let's take a look here. None, except for consumer defensive, which was up 0.03%. Utilities was next, 0.09. These are very defensive sectors, places to hide, I suppose, if the market starts to drop. Now, today was just one day, okay, and the news, of course, impacted the stock prices. But if we take a close look now at the S&P 500, for example, let's do that before we start getting all overly concerned here. Before we start getting overly concerned, we have to look at the charts. Why is that? Because the charts really are going to tell us how bad things are, okay? And they're not that bad, all right? We're looking at a weekly chart here on the S&P 500. We are still in a very strong uptrend. The SPY was down 0.75%. By the way, I'm using the commodity channel index here to help today, just for the SPY here. I'm going to show you guys a few things, teach you about the commodity channel index, or at least how I used to trade it, utilize it for my trading. So what we're looking at is price is still above the moving averages of the Ichimoku indicator, the 9 period, the 26, and the cloud on the weekly chart. And the commodity channel index is still relatively bullish. It's still above the 100 level. Sometimes when the CCI, as they call it, drops under the 100 level, that can be the beginning of a potential drop. Now you can see that if we go straight up, okay, it lasted for a little bit longer and then the SPY dropped, right? And then once it gets under the 0 line, so we've got the positive 100 line right there, is that dotted white line at the top, and the bottom one is a negative 100. And this is supposed to basically show you when prices are a little bit overextended in any stocks or ETFs or whatever. But that can last for a long period of time, by the way. I mean, look at the weekly chart here. You can see this, if we go from this point to that point right there, it was overextended for a period of, for example, 2.8 months. Okay. That's so you got to take it all with a grain of salt. This CCI is not one of my favorite indicators, but I thought, hey, why not try something a little different? Show you guys what it looks like with the commodity channel index. So let's look at the daily chart with the CCI. You can see here it has dropped under the 100 level. But as far as I'm concerned, this is still a very strong uptrend, even on the daily chart. Get rid of that older trend line there. It's still above the, you can see here, these all-time highs back here from, these were back on February 19th or so of 2025. We're still above those levels. We're still above the 9 period and the 26 period and still moving up. But yeah, it was down 0.75%. And on higher volume here, you can see that higher volume bar. What about, now we're going to, you know what, so what can I say about the CCI? It's not my favorite. That's why I'm not going to go into too much about it. It's one of the indicators that you can use on this platform, TC2000. You can hit the plus sign right here, for example, okay? And you can find it if you scroll down right here, commodity channel index, all right? There's a whole other array of different indicators like the Keltner channels and momentum and MACD, of course, all the traditional ones. You can find them all by hitting that plus sign if you're using TC2000. And before we continue with all of this, let me just tell you guys a little bit more about how you can also access the following. If you guys want to have access to this candle cheat sheet, as well as the patterns cheat sheet, this one here that has multiple patterns in here, you can get it for free on my X page right here, Blue Cloud Trading. You'll find me under the handle on Twitter of @BlueCloudTrader. All right. And then what you need to do is, once you're on the page here, go to the highlights tab here, and then just scroll down a little bit. And that's where you'll find it right here and there. Okay. So that's how you can find it. And if you guys like the, the videos that I'm producing here on the channel and you want to support the channel, one of the things that you can also do is when you're on the homepage here, you can click on the subscribe button. All right. And then once you've subscribed, a new little thing will pop up. It will say the plus button. So then you can also subscribe to join as a member as well, if you choose to. And you can become a Blue Cloud supporter, and you can request a stock to be, or ETF to be analyzed on the show. Blue Cloud Trader, this is where you get access to the exclusive member-only videos that I produce. And I go over my entire portfolio. I go over the strongest stocks. And I actually provide 20 stock ideas for the upcoming week, every weekend. And that's really important because we're looking at the best stocks, that have excellent technicals on the weekly and daily time frames. And then if you want daily updates on my trades, Blue Cloud Trade, I do a post every day. And let's see, daily trade updates. There it is. Okay. There's also some day trading videos. You become a Blue Cloud Legend level member. So there's 3 tiers. You can choose which one you're interested in. And basically, once you've become a member, there'll be a new tab that pops up right next to the posts. It will look like this, membership. You click on that, and you can access those posts. If you scroll down further, that's where you can find the member-only videos on my homepage. Real easy. Okay, let's get back. Okay, so let's take a look at the QQQ ETF next now. So here is the weekly chart. We're experiencing all-time highs, as I've mentioned recently. We just broke through these prior highs going all the way back to February 21st. And here we are continuing. Yes, the QQQ was also down 0.75%. And here's the daily chart as well. Okay, but we're still holding up above the moving averages. Let's take a look and see how that looks with the my traditional indicator, the directional movement index. And what you'll notice is we still have the positive DI above negative DI. Nothing has really changed much as far as the picture of this uptrend. Okay, so one day does not change anything. The Dow Jones also dropped 0.91%. One of the things that you'll notice here with the directional movement index is the positive DI is dropping and the negative DI is moving up. So that's not usually a bullish sign. All right, and the volume was also higher. So you don't add positions when you've got a negative candle like that and all of these things. In fact, you'll also notice that the ADX is also slowing down here instead of going straight up, which represents the momentum. I've got this at a setting of 9 for the ADX. Same thing for the directional DI and the positive and the negative DI. But when you notice that the ADX is starting to move sideways, that just means, okay, it's taking a breather. If it starts to decline, okay, then you might, like it did right here, for example, then you might see a more extended 2 or 3 day pullback. And we might get another day pullback down to the Tenkan-sen and then bounce off of that level. We'll see. So far, so good. FEZ, okay, also down. This was a Eurostoxx 50 ETF, down 0.52%. Not down as much as the US indices. Interesting, right? So the European stocks will probably not be as impacted. All right, they're already establishing relationships with other countries. I'm sure they're working with China right now, trying to figure out, okay, what happens if these tariffs go into play? Who are the other players out there that we can work with if we are kind of shut out, essentially out of the U.S. market, because that's what could potentially happen. We might potentially see, all right, and we won't know this, of course, until like August, beginning of August. We'll kind of get a more of an idea, unless, of course, there's another postponement, all right? So it's impossible to know for sure, but it could be really terrible for not just the U.S. economy, but it could be bad for the European markets as well. But I don't think it's going to be as bad, okay? Here's the Russell 2000. Russell 2000 is moving steadily up still, okay? But it was down 1.5% today, all right? Still holding above the Tenkan-sen, the 9 period. It's still above the 200 on the daily. And here's the weekly chart. Now, the weekly chart, we're still inside the Ichimoku cloud, so I wouldn't be recommending the Russell. Okay, it's not as strong as the SPY, the Qs, the Dow, or the Eurostoxx, which are all above the Ichimoku cloud and above the moving averages. Russell is still stuck, okay? How about the VIX? What does that tell us? It tells us about the volatility that's coming into the market. It was up. It was a little bit of a spike, 8.6%. Not a huge spike. Here's a daily chart. If you want to see a really big spike in the VIX, go back in time over here in April. Remember April 4th? Okay, April 3rd. This is what occurred with the introduction of the tariffs. All right. And you can see if we go back April, so there's April 3rd. So you see that popping. When that pops, the market usually drops. And let's take a look at the SPY on that specific day on April 3rd. Because it was, okay, this was April 3rd right here. Okay, so April 2nd was the announcement actually, and then April 3rd, you can see the gap down in the price, and then it just dropped some more. So this is the big drop that we had during the month of April that we've recovered through, and now we're just as we're about to continue with higher highs and all-time highs and continue moving up, we're going to have these tariffs to contend with, unfortunately. So now let's take a look next at the stocks that they talked about on the show and ETFs. All right, like the EWJ, for example, Japan. So let's look at Uber first. By the way, this is a stock that I did add to my portfolio today. I don't typically discuss those on these daily shows, the stocks that I'm adding, but since they brought it up on the show, I thought I would showcase this particular stock. it's been a stock that I've been following for a little while now, waiting for it to break through that 93.60 level. It happened today, and it happened on high volume. And the ADX is moving up. So this is the daily chart. This is ideally what you're looking for. Weekly chart also looks very strong. Okay, ADX is still moving up. Not as much volume on the weekly, but then the weekly has just started so far, so this volume bar doesn't really apply as much. But overall, I'm liking Uber. Okay, and if you want to follow along when I exit this position, consider becoming a member. Blue Cloud Trader or Blue Cloud Legend level member. All right, let's look at BlackRock. BlackRock was Jim Lebenthal's final trade today, July 7th. And now, interestingly, BlackRock is coming right back to that prior high. So January 31st of 2025, that's where we're at. That's 1084. We're currently at 1075. We got ourselves a little bit of a reversal candle right there. So personally, that looks a little bit more like a negative spinning top. And this is what they look like right here, the bearish spinning top. So it could potentially drop tomorrow. So the key thing is to just watch to see what happens. 108,422. But if it breaks through that level, it's going to be experiencing all-time highs once again. Here's a weekly chart. Okay, never been at these levels before. IBIT was Steve Weiss's final trade. Here's the weekly chart on this one. On the daily chart, let me get rid of some of these. So I had this channel here that you can see that it broke through. That happened on Wednesday last week on July 2nd. Stayed above it on July 3rd. I talked about that reversal candle there, and then it dropped down 1.27%. It's still holding, though, above the moving averages. All right, so Bitcoin still has potential here. It's also holding above, let's see here. If we look, yeah, it's above the Tenkan-sen, the 9-period moving average. CrowdStrike is another, whoops, there we go. CrowdStrike is another stock that I actually added a position in back on May 22nd that I'm still holding Okay, so I thought since they brought it up in the show, I'm also sharing that one with you. It's moved up a bit, so yeah, a little over 15% right now since the entry point. So that's very bullish. I'm still bullish on CrowdStrike. It's holding up above the moving averages here in the daily chart and on the weekly, looking good still. Spotify, this was Joe Terranova's final trade back on February 12th, April 15th. He brought it up a little bit earlier in the show. This one on the weekly chart looks very strong. Okay, we've got a nice strong uptrend with the Ichimoku. ADX is still moving up. However, if you look at the daily chart, it's pulled back, but it is finding support at the Kijun-sen, the next level of support, which is that red line, the 26 period. All right, so there's a good chance if we get above that Tenkan-sen, it's going to give us a new buying opportunity here for Spotify. EQT is under both moving averages, but finding support at the cloud itself. So still in a very bullish trend on the daily chart. Here it is on the weekly charts as well, but it's not at a buy point quite yet. Costco is inside the Ichimoku cloud, so it is kind of stuck. I think this was whose stock was that? Let's see here. I think that was a final trade by one of the guys. Joe Terranova. That's right. I think he brought that up. So would I be adding here? No, I wouldn't. I would not be adding the position in Costco because of its position inside the Ichimoku cloud. When price is inside the cloud, it represents indecision between the buyers and the sellers, and it's very evident. Look at the price just kind of stuck in that consolidative state, right? And if we look at the weekly chart, okay, yeah, it's kind of just these last 4 weeks, it's just staying in the same level. But if I had to choose between, okay, is this more bullish versus bearish? I'd say yes, because the weekly time frame, we're still in an uptrend overall. I'd say we're still above the Ichimoku cloud, and it's holding up pretty well above the Kijun-sen. So I wouldn't be closing a position here if you happen to have a position in Costco. EWJ Japan. All right, for the first week now in a while, you heard the news about Japan getting hit with those tariffs, the 25% on top. I think that's on top of the 10% that he already had, if I'm correct. So that's a really 35% tariffs. think about that as Japanese products coming into this country, okay, most likely going to be inflated, where they're going to be more expensive for us to purchase, because guess what? We're going to get hit with that tariff as well, in the form of the higher costs. So if you like Japanese products, expect those products. Could be video game, I don't know. I mean, there's a whole multitude of products from Japan. They're going to be a little bit more expensive if things are not negotiated right, with all this. So Japan right now under the Tenkan in the 9 period, showing some weakness here on the weekly, and on the daily chart, you'll notice that it closed under both moving averages today, right? So it was nice. It was moving up here. It was above the moving averages, just moseying on along, and it just dropped, but found support at the cloud. But I would not be adding a position here. Why? Because obviously the higher volume was negative. The negative DI crossed above the positive DI. ADX is still flat here. The only positive is the fact that it stalled and stopped at the top of the cloud. Next, EWY, which is South Korea. This has been in a very strong uptrend on the daily chart that you see right here. The second that it got above the Ichimoku cloud back here on May 2nd of 2025, it's moved up 21.31%. It's very likely that we're going to see a lot of profit taking place. It happened today, down 3.62% on those negative news. Notice over here, the positive DI is about to cross under the negative DI. The green line is dropping, the red line is moving up, and we've got price closing under the Tenkan. I think there's a higher probability it's going to drop some more. The next level is the Kijun for support, and it's about maybe around 4.8% away from where we currently are. All right, let's look at the Mag 7 stocks next. And actually, I'll throw the weekly chart on this so you can see it too. There's the weekly. You know, it's a little bit extended up here at these levels too. So I would not be, I'd be thinking about taking profits if you happen to have a position in EWY and the Japanese ETF as well. All right, let's see. Okay, so these are some of the Mag 7 stocks. The others are in the portfolio, so I don't cover those here in the daily videos, but I do share what I'm doing with members. So Google, on the weekly chart, still inside the, well, it's not still, it closed inside the cloud. It was above it temporarily here last week, but it was a negative candle. Never want to add a position, generally speaking, when it's a negative candle. And when you also notice that, for example, the Tenkan is under the Kijun, the negative DI is above the positive DI. These are all telling me no. Okay, not quite yet. Chiku span, which is the white line that you see in the background there, that white line there, is the closing price, and you can see that's projected 26 periods ago. That is 26 weeks ago. It's still under the candle from 26 weeks ago. That candle right there. On the daily chart for Google, it's more bullish, so we don't have a confluence of the time frames. The shorter time frame, or the faster time frame, the daily, the more active one is still okay, right? If you're trading based on just the daily time frame, but personally, I like to look for stocks and ETFs that are strong on both time frames. You'll have a higher probability win rate if you do that, folks. And so right now, yeah, it dropped 1.53%, but it's still holding up. All right, it's holding up. We'll see what happens with Google. And then Tesla had the big drop, 6.79%. Check out where it stalled, though. How funny is that? Right at the bottom of the Ichimoku cloud. And it formed a bullish candle, a bullish spinning top. So a bullish spinning top occurs after a drop. Okay, let me show you this. And especially if the color is a bullish color. So if after a price drops, you get a candle just like that right there, it's more likely to bounce here, even though negative DI is above positive DI and the ADX is still moving up. It's more likely tomorrow to bounce. What this represents essentially is that, yes, price did in fact gap down. It reached that level, that support level, but then a lot of buying started happening. And so let's look at that buying that occurred during the day. All right, so I can switch it to a 5-minute chart. And you'll notice right there, so it gapped down, and then what happened was price started to, you can see here, just move mostly sideways, but it was from the opening price, it was actually up. So you can see right there, it closed up after the gap down on the news. So I think there's a lot of they're trying to hold this level here. They're trying to hold the opening. That dotted green line that you see right there, that automatically pops up as the opening price when I'm using a time frame like the 5-minute. All right, and the dotted red line is the closing price from the prior week. So from Thursday, July 3rd, that's where price was. It dropped to 294 from, what was the closing price? It was 315.19. Now it's down to 294.01. Big drop of 6.79. Okay, and on the weekly chart, we're still under the Ichimoku cloud, so I wouldn't be touching Tesla right now. Apple is the next one we'll look at. Also under the cloud. No bueno right there. I would not be adding a position here based on that alone. Here's the daily chart. Yeah, it's had a little bit of a pop up here, but even today down 1.69%. Higher volume negative. Okay. And then let's look at the member requests. CDNS, Cadence Design Systems. Here's a weekly chart. It's come right to the 328.99 level. Okay. And it's just under 320.30. You can see right there, it reversed a little bit. So that's why it's important to wait for the break of the high. Okay. You can see how price came here, dropped. Price came here, dropped. Price came close here, dropped. And now, is it going to drop once again? It's possible. That's all I'm saying. It's possible. And so wait for that break. What's going to happen is the people who have their stops, let me tell you why you want to wait. All right. There's a whole bunch of shorts that are shorting here. All right. And they're putting their buy stops right above that level, the 328.99 level, so that, hey, if this thing starts to go up, it's basically going to close out their position. All right. But what that also is going to do is create a short squeeze. And then you'll see the price pop once it breaks through that 328.99 level. All right. So that's essentially why I would wait for a price to close, not just pierce the 328.99 level, but to actually close above it. All right, next, let's look. So here it is in the daily chart. You can see we had a spinning top, and then it's pulling down. All right, next, CFLT is Confluent Inc. It's in the technology sector, software infrastructure. Let's start off with a weekly chart, the higher time frame. It's been moving up, since April 11th. It's moved up 42.45%. That's a big move. Okay, if we go from this point right here, where it was $18.37 or so, $18.26 or whatever, it's moved up a little over 40% since that move. Now, the problem is, where is it now? It's stalling at the top of the cloud, which is very expected. A lot of other traders are looking at these levels. A lot of financial institutions use this indicator. And so even Fundstrat, the head of technical analysis of Fundstrat, Tom Lee's firm, or firm that he works for, uses Ichimoku. I've seen a few of his videos. Not exclusively, but he does utilize it. So anyway, what's going on here? It's stalling. And so I would not be adding any positions here. You might want to take profits, honestly. You see the drop that happened here in the daily, down 1.83%. I mean, it is holding up above the 200. Maybe I suppose you could give it a little bit of an opportunity here to bounce off that 200. It did stay above it. There's that 200, the dotted yellow line right there. But you're taking a chance because on the higher time frame, you're at a very strong resistance level. Now, if you look down below, the directional movement index does in fact look very bullish. So you can have a bullish directional movement index and no confirmation on the Ichimoku simultaneously. That's possible, but it's not giving you a really strong signal. And then the other thing that you might want to take into consideration is, the profit margin here is negative 31.42%. Okay, CFLT. I'm curious. I do want to see if their profit margins are improving. So when you see a negative profit margin, check to see if it's improving or is it increasing to the downside. And one of the ways you can do that is by using FinViz Elite CFLT. And let's minimize this a little bit. Here we go. And we're going to go down to the statements. And we'll look at the net margins. And you'll notice that they are improving, in fact. So see the histogram here shows that, yeah, it's improving. That's the annual. Okay. What about quarterly? Oh, I'm sorry. That's the quarterly. What about annual? Net margin also improving. Okay. So that's positive. It's showing that there's some, they're doing a better job of increasing their profit margins at least. Okay. Their sales quarter to quarter are still very strong, 24.8%. Their price to free cash flow is really negative here. Ooh. Let's look at that real quick. That's something I would be very concerned about. So you go to over here, you go to cash flow, click on that. We'll look at the annual and the quarterly on that. So let's see, free cash flow. Okay, so it's better than where it was. That's the difference from 2023 to 2024. Let's look at the quarterly, more up to date. Okay, so you see that big drop? That's not good. So, yeah, I'm not getting a good vibe here just based on the free cash flow situation. Why is all that money coming out? Their shares outstanding are increasing as well. That's not a good sign. That's diluting the shares. Performance for the year is down 11.24%. And performance year to date, it's down 7.65%. And so what to do in a situation like this? Let's hypothesize that I don't know if you're holding a position in this or not, but if I was, I would be, focusing, since the weekly chart is giving me a negative signal here. I would be looking at the daily, focusing on this, looking at the technicals. As long as it stays in the strong uptrend on the daily, you hold a position. Maybe you switch it also to the 2-hour time frame. Okay, you can see it pulled back a little bit, but we did get a bullish candle in the last 2 hours. You can go down to a 30-minute. All right. And it's still technically in a strong uptrend, even on the 30-minute chart. So it's really up to you to determine what you're going to do here. App Lovin' on the weekly is right under the moving averages. I like the fact that we got a bullish shift here. The Tenkan-sen crossed above the Kijun-sen on the weekly chart, but price is still under. So I would not be adding here, obviously. On the daily chart, we're still under the Kijun-sen, and we have a bearish crossover. So we don't have anything positive here on the daily yet, except for the fact that I want to just once again show you guys how strong these levels, the cloud itself is finding support there, and there again. It's almost like it's hugging that cloud, right, for dear life, trying to stay above the cloud, because once it comes in, bad things can happen. It's still also above the 200-day, that dotted yellow line right there, so that's good. All right, that's it. That's going to do it for this video. Hope you guys enjoyed it. Hope you all had a fantastic long weekend. I did. And yeah, we got some good weather, some hot weather. Anyway, have a good rest of the evening or day, depending on what country you're watching this from. We've got viewers from India, China, Singapore, Spain, you name it. Every country you can think of. So thank you all for supporting. Thank you all for helping me reach that 20,000 mark. Really appreciate that. Let's go for 30. Let's do it. All right. I'll catch you all in the next video.